What's up, guys? It's Brian from Hashware Hub. It's about 10:08 p.m. Eastern Time, April 10th, 2018, and we got a new trading video for you. But if you are first coming to us and you've not seen our videos before, I would ask you to please subscribe. We have lots of crypto technical analysis here, which I think is pretty good, but don't take my word for it. Take a look at all the comments. And what I'll ask everybody else is, well, to like and comment on the video. So subscribe, like, and comment. All three of those help us out quite immensely, and it's even worked as much as even the last video. I think the last video we have almost 5,000 views, and for us, I think that's like our tops. I think it's almost 5,000 views, and that's only because people have been liking, subscribing, and commenting to the videos. And I can't thank you guys enough for that. So please keep it up. Yeah, let's go from here. Let's do it. All right. So this video is gonna be a mess. It is. I don't know how else to say it. It's gonna be messy. A messy video, and I'm gonna hope to remember to tell you as much as I wanted to tell you, and all the things I wanted to tell you, but I'm sure I'll eventually end up leaving something out. But anyway, we're looking at a daily chart. This is Bitcoin on Bitstamp, and let's take a look at it on 1 hour basis. And why did I say this thing was going to be a mess? And I'm gonna go right off the bat. I'm gonna go ahead and straight into the mess, right? Let's not beat around the bush. And I'm gonna do that by zooming out. All right. And what do we see? What have I added to the chart since? I've added the following. I've added this channel right here, okay, and a smaller channel that's within it. All right, I've added those two things. And I've also added this blue line right here. Okay, this blue line right here, and we're gonna get to all this in a second. Okay, so the channel is very simple and straightforward, right? I mean, that makes sense why you draw a channel here, right? You have basically 1 point, 2 point, you have a third point, you draw a channel. It's just to see what's going on. Now, what can we also do? I'm zooming in now on a bit more of a micro scale, and I'm going to look at this on a 30-minute basis. And there's another channel here. So we got a channel and a channel. And yeah, I guess you can consider these things bear flags. Not so crazy about calling them that, but yeah, that could be the case. But I look at channels because I look at opportunities to trade. So when a thing is gonna, so I look, in other words, I look for places where price may move drastically in one direction or the other. And quite honestly, I really don't care which direction it goes. Yes, obviously I wanted it to go up because I just, I'm huge into crypto, and I really do think it's the future. But as far as a trader is concerned, I really don't care either way. And we need to, a good trader will go ahead and really try to think of as many of the possibilities that could possibly happen, right? So they're not caught off guard. So, and this is, part of that process that we go through, okay, is doing stuff like this. So, on the 1 hour basis, let's look at things a bit more. And I'm actually gonna make this a little larger because I think we're gonna need a little bit more real estate. There's gonna be a lot of whips on in and out of things here. So, what did we draw? We drew this red line, okay? This red line here I'm talking about right here, okay? From the top here, it hit the top here, it hit the top here, and then this is what we got right here, okay? This is what we got right here. The market pierced through this, right? Pierced through this quite lovely, and then it came down, and now it's sat right on top of it, and now it's slightly moving up again. Okay, so as far as I'm concerned, this line has worked. Now, there's a few different things. There's a few different ways you can go about this, right? So you can say, okay, fine, that line has worked, or maybe it didn't work, right? Maybe it didn't work. Maybe this really isn't the line. Maybe the line looks something more like this. Okay. Maybe it looks something more like this, right? And that's kind of a valid thing to do. Okay, you know, some people have drawn things like this. I don't particularly like it all that much, so I'm sticking with the other one. It just doesn't fit as well, and I don't think it tells us any more information. So I like to keep the other one. Okay. Next, I also draw this line right here. Excuse me, this other green line right here, bluish green line, whatever you want to call it, T line right here. Because I see kind of this high here, I see this high here, I see this high here, right? So maybe this is not really a channel right here. Maybe we have some sort of triangle formation, okay? Maybe we have some sort of triangle formation. Now, originally we were talking about this, and we were thinking this was going to be an A, a B, and a C. Well, it's looking less and less likely that that's going to be the case. Sorry, I got to take some water here. So it's looking less and less that that's going to be the case. But I'm going to hold on. I'm going to hold on to this for a little bit, for a little bit more, in the case that it does turn out to be that. As far as this correction that we have right here, well, yeah, it could be a triangle. This could be the top of it right here, and the bottom of it would be the bottom of this channel. Okay, so this is a fact-finding mission. That's what you do, fact-finding mission. And I'm gonna this arrow up. I'm gonna delete it. This indicated on a 4-hour basis where our triple B trade was, but I'm gonna delete that because I think we spoke about that in depth. So where are we sitting right now? Let's really zoom in for a second, okay? We have the 55 EMA and the 200 moving average sitting almost right on top of each other, okay? Let me move this out of the way. Okay, you see this? Maybe I can make this a little... Yeah, there we go. So, you know, there is resistance here. There's quite a bit of resistance. Also, we had this 1-hour resistance line that we had drawn right at the 6,872 level. And we've drawn this, I think, a few different places, but most recently, I think we drew it right here, okay? And this line would have ticked up as the market moved up, right? But since we didn't make a video, I don't think we've made a video for quite some time, about a day and a half or something like that. This basically has stayed where it's at. So now actually, did we we drew it back here. I don't remember when we drew this. So what do we have? We have this 1-hour resistance level, okay? And it's at 6,872. Now this is going to change, okay? Because this 1-hour resistance level, we're actually going to be turning it into support. And actually, hold up one sec here. All right, I had to go back. It was bugging me. When did we draw this? It was right about here. Okay, right about here. This 1-hour resistance level, 6,872, was drawn right here. But you could see the significance of it, over here, over here, over here, and clearly the market has stopped basically right at it. Okay, right now the 6,872. But there's also a support line, and we're going to get to that in just a bit. But there is a 1-hour support line, which is about 6,784. So we're kind of in this like band, right? We're in a band within a band. Okay, does that make sense? So we're band within a band with a triangle with a band. We have a lot of different patterns all together. Okay, so I hope that makes sense. So next. Next. So this these two channels and the wedge. The wedge, we can look at this wedge from a few different ways, and there's obviously two main ways. But you can look at this where this is an A, we have a B, we have a C, we have a D, we have an E, and this thing is going to rocket up. Okay, and that could be the case. Because we're seeing a fair amount of bottom formation going on here. Okay, The other way is that this is A, this is B, this is C, this is D. We're gonna have an E, and then this is gonna come back down. And I can make a case for that too. One is the more strict. One is the more strict way of going about counting this, and the other is obviously not as strict. But you know, you have to account. You have to obviously account for both ways. So that's what's going. That is what is going on there. Next, I want to show what's going on with the GAN fan. Excuse me. The GAN fan, and yes, we are a fan of the GAN fan. And I'm going to draw this real quick, something like this, okay? And what I do want to show you is this, right? Right here. See how the market pierced through this, right? See how the market pierced through, okay? And then it came back down, and then it went up, right? And then it came back down and it stopped right on top of this GAN fan line again. Okay? So, you know, this is very telling that we're fitting the GAN fan properly. Okay? A lot of this information over here, over here, over here, right? Over here. I mean, so one of the things I'll be looking at is this in particular, okay? And the way I've done that, is this 2 to 1, this 2 to 1 line, right? So what I've done is, if you just allow me to delete this, right? This 2 to 1 line is exactly this red line right here that I was mentioning before, right? So one of the things you want to take a look and see is, and I'll just pull up, you know, let me just pull up some blank space real quick, okay? When you see the GAN fan, right? Come on. Right? I'm just going to draw something. When you see the market, you know, coming down, right? Zigzagging back down, right? And then you see it kind of going sideways, right? So in order for the market to go up, right? It has to break through all of these GAN fan, all these GAN angles, right? The 1-8, the 1-4, 1-3, 1-2, 1-1, 2-1, right? So on and so on. So, and these are normally, these are like stopping places where the market stops, right? They're areas of congestion or resistance or support, depending on which direction you're coming from. And so in order, remember, if you remember what I had drawn back here, that if we are going to be getting bullish, and we need to have some sideways momentum, right? At the very least, obviously you need to have some upward momentum. But if you can't get upward momentum, then the next best thing is sideways momentum, right? And even if we go sideways in time with regards to the GAN, we're still breaking through those levels that I was mentioning, right? The 1-to-1, 2-1, 3-1, 4-1, you know, so on and so on. So it's another way to skin a cat, in other words. And it's perfectly fine. It just takes a little bit longer to break through those areas. So, as I had mentioned some time ago, these are things that I am looking at, and in particular, this line right here, okay, is one of those GAN angles. All right. So, if we are going to go ahead and get bearish again, well, then we have to break this angle, right? If we don't break this angle, let's say we just we come down, right? And we just don't break this angle, and this angle is acting as an area of support. Well, you know something? I'm not going to be actually all that bearish. Yes, the angle is somewhat steep, but even still, I'm not going to be super bearish, right? I mean, we can continue to move down. Don't get me wrong, but if we don't break this angle, well then it's not a huge and immediate, you know, panic sell-off. And now on the opposite way, if we do pierce straight below it, well, that's a way to indicate panic, right? And that's when you really want to buy. All right. So next, All right. So somebody so when we had spoken about this right here as far as a bearish divergence, right? Let me pull those things up right here. Okay, we mentioned we had a whole video on as far as a bearish divergence, and then some people had gone ahead and shorted it. They're calling it the BBS trade. I love it. And I had mentioned, you know, right around this level right here. I think we're right around here, like this, I don't know, 67 and change level, 6,700 and change level. Like I remember mentioning, get out. And you know, I had received some comments. Well, why get out? Well, it was a great trade, and it was a risky trade. And where do you think it's going to possibly go? I was thinking possibly it would go to this red line here, or it would go to this support right here, right? And it actually went to both of them. And so how much more are you going to try to squeeze out of a trade, right? And that's something. The reason why I mention this is not to say, hey, look, I was right and you were wrong. It's to say, you know, a lot of traders get caught up to try to get blood from a stone. You know that saying, right? So in other words, you got so much out of the trade so far. Well, just book the profits, right? Book the profits before you have to book a loss. And booking a profit in any trade is a good trade. Even if you leave a ton on the table, right? You booked a profit and you move on to the next one. And if you set up the trades in a manner where they're lower risk, well, you know, you're gonna win over time anyway. So if we were sitting right here, well, how much more do we think we possibly could get? I don't have a crystal ball. Nobody does. And, you know, at the best, I thought we would have gotten down, you know, to this red line. And that's what we did. We happened to get down to the red line almost, right? We just missed it. So maybe it's just my trading style, but that's what I like to talk about. I like to talk about my trading style. Not anybody else's, because I don't know anybody else's trading style. I know mine. So that's what's going on there. Next up, let's go ahead and take a look at the Death Cross update. Ooh, the Death Cross update. Where are we? So we crossed. I don't define it in a traditional sense. It would be 50 moving average, 200 versus the 200 moving average with 50 crosses underneath the 200. Because I like to use the 55 EMA because I'm special. So it crossed over right about here, right? Here, wherever. And so what happened since then? Well, we're pretty much right at the same trading level. We pretty much went sideways. Yeah, okay, we went up, we went down. But we're pretty much right at that same level. So, excuse me. I'm not trying to say not to be scared of death crosses, because a lot of death crosses in the past have gone on for quite some time. But it's no reason to really, you know, be screaming the sky is falling. At least the sky's not falling yet. And there's always good things to look at as far as why, you know, reasons why the market may move up. And one of the things I like to point out is that exactly here. I mean, to me, this looks like we are forming a base. Okay? Looks like we're forming a base here. Even on a 12-hour basis, right? We're forming a base. Daily basis. Base. Weekly basis. You know, okay, we still got a bunch of days left, but I mean, look at this, right? Wick. Now, I know we have quite a few days left over in the week, but even still. So let's keep an eye out on that. All right? Because we may possibly have a base forming here. And I'm going to get to something else in a second at the end to show you guys things a little bit differently. Maybe even a bit more fundamentally. Wow. Yes, I know. It's crazy. He's going to talk about fundamentals. Not really, but close enough. As much as I speak about fundamentals here. So let's look at things on an hourly basis again. Our good friend, the hour chart. And people have asked me before, why do you like the hour chart? I like it because I like it. I don't know, it just suits me. That's it. Simple as that. You may find something you like better. 2 hour, 3 hour. You may like the 61-minute chart better than the hour chart. I hear that's really good too. So, the 1 hour resistance we had is a 6,872 level right here, right? But I'm gonna also put a 1 hour support of 6,784, and we're gonna have, like I mentioned before, kind of like this quasi like channel, right? 6,000. Where are we? 6,000. Oh my God, I got it right on the money. I was 4 cents off. 6,784. This is what I look forward to. All right, so I'm not gonna put the number. Yeah, I'll put the number in, because then I'm gonna get somebody that you didn't say that. You didn't say that. How dare you? Okay. Okay. So, boom and boom. All right. Next. Maybe I can. No, I won't clean that up. Why clean things up when they're so dirty, right? Next, 4 hour resistance. I know we didn't have one before. 4 hour resistance, 6,922. Okay. I know this is getting so dirty. Four hour resistance. 922. Okay, 6,922. I know this is just an absolute like wasp's nest, okay, of lines and everything else. That's just me, boys and girls. I don't know. Maybe after looking at charts for so many decades, I'm more comfortable putting more things up. And yes, every once in a while, I do clear a lot of this stuff off, or I'll just look at a fresh chart, because it helps to kind of like let the juices flow, type of thing. You get new ideas. Daily resistance, though, we are changing. The daily resistance is going from 7,848 to 7,402. So this daily resistance level is moving down, and it's moving down because we're just going sideways, right? And I start tightening it up. Okay, because I want something to happen. I want there to be some sort of decision point. And this makes sense. This daily resistance level, 7,402, makes sense because it's the top right here, right? This makes a lot of sense. So a lot of people ask me, how do you calculate this? About 20 years of doing this, I've generated a bunch of algorithms that does this. And it's back tested, et cetera, et cetera, et cetera. So I won't be giving that unless somebody wants to pay a lot of money. First of all, but second of all, I'll just be giving it out on here, so you guys get it for free anyway. But if you want to figure out how to go about doing it, just look at a lot of the swing highs and the swing lows, okay? Look to see where the market may find some areas of congestion, right? You can go about this yourself. You don't need these special resistance and support lines, okay? They work extremely, extremely well, but still, it's not a must-have. So, next, what are we going to get into? Okay, so what I wanted to show you guys was this. No, not this. Was this. Okay, so we're going to look at the daily chart, right? And what I'm going to do is I'm going to overlay something else. Okay? Here we go. Okay. Okay. And in order to make this easy, I'm going to call this just price line. No, not price line. Hold on a sec. Style bars, line. Okay. Now, let's zoom in. Now, let's zoom out. Now, somebody new to the market may say, wow, the shorts are rising. Right? So if I read the symbol correctly, it's called BTC USD shorts, right? And if I understand this properly, this is the amount of shorts versus longs going on in the market, right? I probably should have done more homework on it, exactly what it is, until I spoke about it, because now I'm second guessing myself. But even though I've looked at this line for a very long time, I just took it for face value what I thought it meant. Anyway, so let's just go with this right now. So you would think if the amount of shorts versus longs are increasing at a very increasing rate, you would think that the market would have to go down, right? Well, I don't think so. I think actually just the opposite. So if you think about it like this for a second, if everybody's shorting, right? Well, then most likely most people are going to have a certain amount of risk that they're willing to take. In other words, a certain amount of risk that they're willing to stomach. And what you'll find out is that overall, a lot of people have a similar reaction to movements in the market. So let me give an example. So let's say, for example, you shorted something at 100, right? $100, and now the market moved up to 105, right? Well, you would see a lot of people covering the shorts, right? Because they would say, well, I only expected the market to go down to a 90, right? And I wanted a 2-to-1 on my profit, on my risk-reward ratio, right? So it went up. I expected it to go down to 10, and it went up 5. So now I'm out of the trade, right? And you'll see a bunch of people start covering. And then let's say the market then moved up to like 107, and then you would get more people. Let's say it moved up to 110. What was it? 110, 110, and you get more people covering their shorts. What do they have to do when they cover their shorts? They have to purchase. They have to buy, right? And so if they have to buy, as the market's moving up, now you have even more buyers, right? So the market gets squeezed, okay? The market gets squeezed into this point where the only place it can go is up, right? And the only place it can go and go fast is up. Now, I'm not trying to say we're at that point right now. Okay, but let's just look to see what happened in history, in the past. Okay, and the way I look at this is on a relative basis. And man, this video went really long. Damn, 28 minutes. All right, we haven't made one in a long time, so I will excuse myself for that. But anyway, so let's just look generally, right? Okay, so the amount of shorts went up. Okay. Amount of shorts went up here. The market kind of went down, then it went up, right? And then the amount of shorts, it came to a certain high, right? And then the amount of shorts came down, right? And then we got another leg up, right? And then the amount of shorts, kind of went up again. And then we got a small little leg down, a small little correction, right? But then look, the amount of shorts, went from here to here, and we had this huge run up. Okay? So, in other words, the amount of shorts purged, right? The amount of shorts purged out of it as this was running up. Okay? So as the shorts were increasing, right? the market was also increasing, right? Till finally it got to a point where the shorts just said, oh, forget, this is not working anymore. I got to cover, right? And the market then went up again, right? And then so then more people then started to short. Then there was a little bit of a correction, right? A little bit of a correction. But when that correction happened, it was basically at the top right here, right? And then the shorts fell off and the market fell off. In other words, the amount of shorts that were outstanding went down, okay? But so you don't need more, in other words, you don't need more shorts in order for the market to go down, right? The shorts decreased and the market still went down, okay? So let's move on a little bit more here, okay? The shorts relatively came from this low, and they went up, right? The amount of shorts increased, right? So the market came here, right? And then we had this purge where everybody. So okay, so here's another thing, right? So let me just roll back for a sec. Okay, so we're down here, right? And so people then say, oh, this has got to be the top. I'm going to start shorting it. So more shorts, more shorts, more shorts, more shorts. What happens, right? So the market goes from here to here, right? And people said, I had enough. So they started buying back their shorts, right? So the amount of shorts dropped and the market just went up even more. Okay? So here, again, we had another peak in the shorts. Okay? Another peak in the shorts. The market came down, okay? So yes, here it was correlated with the short basically momentum or the short direction, right? But the market kept on going down, right? You didn't see shorts increasing, right? Look, from here, from here to here, right? We had this huge sell-off, but the amount of shorts didn't increase. It stayed low. So you don't need shorts to go down, right? To go down quite drastically, right? So then the market then, it's not the market. The number of shorts went up again, right about here, right? And then yes, we did have a sell-off. Okay, so similar to like what happened back here. Okay, but then even still here, right? The market kept on going up, and the shorts kept on going up, right? And then we had a sell-off here, right? And then now we're having the shorts increasing drastically. Okay, but what I believe is going to happen, and I probably didn't do such a great way of explaining it, and my apologies, but what I expect to happen here is that, because at best it's 50-50. At best it's 50-50 that when the shorts go up, the market goes down, right? It doesn't always happen like that. And I know a lot of people are thinking that, oh, the shorts are going up, we're going to have a huge sell-off. I'm thinking it's going to be the opposite. I'm thinking that if the shorts are going up so much, if the ratio of the amount of shorts versus longs are going up so much, I think what's going to happen if we do see the market go up, okay, we could have a huge explosive run up, because people are going to have to start covering the shorts. And we're at all-time highs, right? It's crazy, right? We're not at all-time highs of shorting here, right? We're at an all-time high of shorting here. Ludicrous, right? But that's the way markets work. So if we were here and we had the amount of shorts was like this, like we had a similar chart, but the blue line was kind of moved back to where we are over here, I would say, yeah, we're in for it. This thing is going to drop off a cliff. Just looking at this independently. But I'm looking at this now, and I'm saying to myself, well, when the shorts rise, doesn't mean that we're gonna go down, right? I mean, look right here. The amount of shorts rose here, right? What happened? Then the shorts fell off, and the market continued to run, right? The shorts ran up again, right? We had a little bit of a sell-off, right? But then the market ran up again, right? And the shorts rose up again. And then the shorts had to cover because the market kept on going up, and then the market went up even more. Okay, I think we're gonna get something like that. As far as this is concerned, with the shorts versus the price of the market. Now, I'm not trying to say I'm trying to pick the bottom, okay? But what I am trying to say is maybe, excuse me, maybe we may be in for another triple B trade. You guys must be thinking I'm losing my mind. Yeah, maybe we're in for another triple B trade. I'm so freaking excited. So be on the lookout. We may be in for another triple B trade. I'm not sure when it's gonna happen, but I'll try to loop you guys in as quickly and as easily as possible, like the last time. And maybe we get even a better trade out of it. Even though last time we called the break even, but we made a little bit out of it. And even before, even when I said for everybody to sell and we were going to hold on to it, that would have been the place we would have sold anyway. But I was trying to really kind of swing for the fences on that one. But maybe this is the triple B trade that we're waiting for because of the shorts. We can thank the shorts. So whoever's shorting the market, keep shorting it, because I can't wait for you to cover, and then everyone's then going to dump into it, and this thing may rocket up, okay? I know you may be a little surprised that I'm even saying that. Excuse me, because I am usually really, really bearish, or pretty bearish, but I'm seeing some bottom formation coming in here, okay? But like I mentioned before too, okay, there are some bearish scenarios, especially talking about that ABCDE, this possible bearish flag, this larger possible bearish flag, the ABCDE that I was talking about in here, where we're coming to an end of a triangle. But there's also a way to count that as a bullish ABCDE. But also we also have the GAN fan that's looking more and more bullish, right? So there's a lot of different things going on here at the same time. What I would also do here is I would extend this bottom line right here out further, right? We want to see that this thing, that this level, let's call it 6,600, okay, is really not broken. I don't want that to be broken, otherwise we could possibly fall much, much lower. And I know that I do owe you guys some Elliott wave analysis, and I will be getting to that soon. I just am having way too much fun. Anyway, definitely hope you guys are listening on this 1 1/4 speed, if not 1.5 speed. And have a great night. And I will speak to you guys tomorrow, most likely.